Hey guys, it's me Aisyah Mustafa from JBA1144E. Our topic today is how to invest in equity investment. Let's start! At the end of this video, you will learn what is equity investment, what is shares, main advantage of equity investment, and how to invest in equity. First of all, what is equity investment? Equity investment is the money that is invested in a company by purchasing shares of the company in the stock market. These shares are typically traded on a stock exchange. What are shares actually? Shares are a unit of ownership interest in a corporation or financial asset that provide for an equal distribution in any profits, if any are declared in the form of dividends. These are an instrument for raising capital for a business by distributing it to investors. Next, there are three main advantages of equity investment. Firstly, potential for profit. The potential for profit is greater in equity share than any other investment security. Current dividend yield may be low, but the potential of capital gain is great. The total yield or yields to maturity may be substantial over a period of time. Secondly, limited liability. In a corporate form of organization, its owners have generally limited liability. Equity share is usually fully paid. Shareholders may lose their investment, but no more. They are no further liable for any failure on the part of the corporation to meet its obligation. Thirdly, hedge against inflation. The equity share is good hedge against inflation, though does not fully compensate for the declining purchasing power as it is subject to the money rate risk. But when interest rates are high, shares tend to be less attractive and prices tend to be depressed. Lastly, how to invest in equity. The first step is decide how you want to invest in stock. There are several ways to approach stock investing. The first one is by your choice if you already know the shares buying game and just need a brokerage to process your transaction. Furthermore, shares can be a great investment, right? But you will need someone to manage the process for you where they invest your money based on your specific goals. The second step is open your investing account. Generally speaking, to invest in shares, you need an investment account. This usually means a brokerage account. For those who would like a little help, open an account through a stockbroking firm is a sensible option, or else you can open at any investment bank. Third step, know the difference between stock and stock mutual fund. For most people, stock market investing means choosing among these two investment types, which are stock mutual fund or exchange traded funds that let you purchase small pieces of different shares in a single transaction, while individual stock that if you are after a specific company, you can buy a single or a few shares as a way to dip your toe into the stock trading waters. Next, set a budget for your shares investment. The amount of money you need to buy an individual shares depends on how expensive the shares are. If you have a small budget, an exchange traded funds may be your best bet. If you are investing through funds, you can allocate a fairly large portion for your portfolio towards stock funds, especially if you have a long-term horizon. Last step, start investing. Equity investment is filled intricate strategies and approaches. Yet some of the most successful investors have done little more than stick with the basic. That generally means using funds for the bulk of your portfolio and choosing individual stock only if you believe in a company's potential for a long-term growth. What I can conclude is that investment landscape can be extremely dynamic and ever evolving. But for those who take the time to understand the basic principles and the different asset classes stand to gain significantly over the long haul. That's all from me. Thank you for watching, guys. Bye.